You're with us, Yuka. Global markets have capped a tumultuous month.
Yeah, well, let's start with the oil market, Sharon. International benchmark Brent crude for May rose about 5% to $118 per barrel and posted a 64% surge this month, the highest in decades. But its futures for a later month, June, fell significantly on reports that Iran's president said the country was willing to end the war if its conditions were met. The US's West Texas Intermediate fell slightly to about $101 a barrel. US stocks, meanwhile, rallied very strongly after the news about Iran's comments. The Dow jumped over 1,100 points. The S&P 500 made its biggest daily gain since last May, and the tech-heavy Nasdaq rose nearly 4%. Earlier, European bourses saw mild gains but capped a very bad month. The Pan-European Stocks 50 index declined 9.3% for March, the biggest drop since January of 2008.
And meanwhile, prices at the pump have soared in the United States to the highest level in 4 years.
Well, Sharon, the national average for the price of regular gasoline jumped past $4 a gallon, about 3.8 litres on Tuesday, for the first time since 2022. The price of diesel is even higher, around $5.50 a gallon. The fuel is widely used in the US for goods transport, and the rapid price hike will likely feed into higher costs of food and other items. This makes it difficult for President Trump to keep his promise of bringing the cost of living down as the US heads into midterm elections. Here's what one analyst has to say.
A 45% increase in the last 4 weeks. That is a record-setting 4-week increase. And while many Americans have increased median incomes compared to what they did in 2009 and 2022, it still is uncomfortable for many consumers seeing the dollar amounts on those gas pumps going up much faster than gallons. It will likely leach into other areas of the economy. Consumers likely to start reducing spending in light of increased spending at the gas pump.
And you can hear in Europe, we're starting to see inflation ticking up because of the war in Iran.
Well, inflation across the single currency Eurozone has surged past the European Central Bank's 2% target, according to flash estimates. The figure for March comes in at 2.5%, up from 1.9% in February. Excluding energy, the rise was slower at 2.3%, slightly less than in February. But that's been offset by soaring energy costs, up nearly 5% from a year ago and nearly 7% from the previous month. In France, headline inflation came in at 1.9%. That's below the Eurozone average, but it still represented a significant jump at a time economic activity has been slowing down.
And amid soaring energy costs, Egypt is asking businesses to close early.
Well, since Saturday, restaurants, bars and shops have had to close by 9 p.m. on weekdays with a 1-hour extension on Thursdays and Fridays. The government also ordered businesses to partially switch to remote work. Egypt is caught between needing to manage the current crisis and navigate reforms, as it had agreed to remove fuel subsidies as part of an IMF bailout deal. Luke Schrager explains.
Evening gloom draws in across Cairo, giving a different face to a city that usually hums with life deep into the night. It's the result of the Egyptian government ordering early closures for businesses and shutting off streetlights and advertising to help with the energy crunch.
If the government were to extend 9 p.m. closing to midnight or 1 a.m, it would be reasonable, but 9 p.m. is really hard since we're heading into summer. Our work usually starts after 8.
Since the US and Israel went to war on Iran, Egypt has seen its monthly fuel bill for natural gas imports triple, from $560 million to $1.65 billion. Despite its own gas resources, domestic production has fallen as demand has increased in recent years, leaving the country dependent on sources in the US, Qatar and Israel. Doha and Israel, though, cut their own production amid Iranian strikes on regional energy infrastructure and storage issues, with the latter also scaling back Egyptian deliveries to surplus after meeting its own needs. While consumer inflation is down from a 38% peak 2.5 years ago, it's still persistently high at over 13%, and shaky finances have been battered further by a need to reduce fuel subsidies under the terms of an International Monetary Fund bailout package. One bright spot for Egypt, its economically vital tourist areas aren't subject to restrictions, with the sector still bringing in about $20 billion a year.
And finally, Unilever is selling off its food business.
Yeah, the consumer goods giant has struck a deal with McCormick to merge its food unit with the spice maker. The cash and stock agreement estimates the business at about $45 billion and marks the end of an era for Unilever, whose origins date back to the 19th century, when the Jurgens family started selling butter. The multinational conglomerate will retain a 9% stake in the combined business, though it plans to sell it down later. Unilever already spun off its ice cream business late last year. And that's it from the business desk.
Yuka, thanks so much. Yuka, way there with all the day's business news.